thank you so much for that very kind introduction and for that warm welcome. And it's wonderful to be here. Particular thanks to Jordan and Danny, who got me involved in this. I confess, of course, I had heard about Chautauqua. When Danny told me about what made this place special last week, he kind of waxed on about how great it was, and I kind of nodded my head, and I was like, yeah, whatever. And then I show up, and it's just a really remarkable place, and it's such a joy to be here. And as I was walking around this morning and last night, the only word that came to my mind was storybook. It is literally storybook-like, and congratulations on what you've built. I think it's just a remarkable thing as far as I understand it. So let's dive in. And when you come and give a talk like this, you have really two choices. One choice you can make is you can present a finely crafted jewel of an argument that you have polished and you have made so bright and shiny and so beautiful and so tightly integrated that it is impenetrable. Or you can present an overflowing garden that probably needs pruning. It's a little rough around the edges, and it's a work in process. And it's not clear what you're going to keep, what is going to go. As you can tell, I've chosen the latter. And that's just a way of saying these are not ideas I've really put out there in this way before. And I wanted to do that because I think this is a very unique opportunity, but also because I've been struggling to understand the world. And this is my effort to try to understand the world we live in, and I'd like some feedback. So I don't want to present a finely polished gem. I want to present something a little raw, and that's what you're going to get today. Okay? Great. So let me tell you, thank you. So let me just try to motivate this. And I think some of this is going to be obvious, but I think it's really important just to get a grounding in this, which is financial markets are really, really important. In a capitalistic system, they determine who gets capital. So it's kind of important, okay? And I think that it is one of the major reasons why the United States has succeeded in the last 70 years in the way that it has succeeded. And I say that unabashedly. I think financial markets are critical, they're important, they're beautiful, they're wonderful, they are many, many things. And I think they've given us a great deal. So that's the first thing to say just about financial markets. I think, here's the point of the talk, I think these last 2 decades have seen a fundamental change in the way financial markets work, the way they interact with the real economy, and I think those changes have spilled over into the economy, and these are the biggest claims, culture and society. So the other thing about this talk is I'm going to put some of my academic instincts to the side, which would measure every claim, measure them twice, and then cut. That's my academic instincts, as they should be. I'm going to be a little bit more aggressive in my claims, because that way you can push back, and I'll know when I get over my skis and when I'm okay. I don't actually ski. I don't know what that means, but I think it means to be too aggressive. But that is the fundamental claim. So the way I have thought historically about financial markets is via the analogy of the mirror and the lamp, which is the name of a book I read in college. I don't know if anybody else in here read that book in college. It's a lovely book about poetry and about how poets used to think about themselves as mirrors reflecting reality, and then with the Romantic period became lamps, sources of inspiration, sources of light. So financial markets, and this is why they're beautiful, they are historically and typically, we think of them as mirrors and lamps, and we need these mirrors and we need these lamps. What is a mirror? Have you created value? How much value have you created? Look to financial markets to figure that out. How much value did Jeff Bezos create? we look to financial markets to understand that question. They are reflecting economic reality. And then we use a lot of things based on that reflection of that economic reality. So that mirror function is really, really important. And they are lamps. What does that mean? They show us the way. They show us the way forward. When prices in financial markets move, people respond. What do I mean by that? Why is everybody talking about artificial intelligence? Because financial markets are telling them that AI is the future, because the prices of AI companies have gone through the roof. And then we respond to that. They are a lamp. They show us the future, because that is what financial markets do. They look into the future, they try to figure out what it's going to look like, and they bring it back to the present. That's why they're beautiful. That's why they're wonderful, because financial markets are mirrors and lamps. Here's the point of the talk. I don't think they're doing either of those things terribly well, and now they're doing something completely different. So what is it that financial markets have become? So they have become, I think, mechanisms for manufacturing wealth, extracting wealth, and to some degree redistributing wealth. That's not a mirror. That's not a lamp. That is something completely different. And I think that's really important. And it's changing, I think, a lot of things in our economy and in our society. You might say, yeah, whatever, it's been going on forever. No surprise. And the answer is, I think it's different. And I think it's different this time, because the grift, which was always on the periphery of capitalism, capitalism always has grift on the periphery, and it's an important part of capitalism. What do I mean by grift? The hucksters, the people who are not doing always legitimate things, you always had them on the periphery. The point of this talk is, I think they're in the core. They're not on the periphery anymore, and that's different. And that's really different. And so why call it the era of magical thinking? So the way this has happened is because of this very unique set of circumstances over the last 20 years that have given rise to this era of magical thinking and that have changed financial markets, and financial markets have abetted that change. So that's what we're going to talk about. I'm going to try to walk you through several ideas. So the first is, I want to create a common idea of what finance is about. So I just want to talk about what financial markets do and just get some level setting of that so we understand what financial markets do. I then want to introduce the idea of the era of magical thinking. Some of you may know Joan Didion's book with that name, This Is Not the Same. But we'll talk about what the era of magical thinking is in my mind. And then we'll talk a little bit about how it plays out. And in particular, how it's changing the way finance works in the world, because it's become a mechanism, and I'll give you a couple of examples, of the ability to basically manufacture wealth via them, how they redistribute wealth, which I think is increasingly what's happening in financial markets. Again, not a mirror, not a lamp, something completely different. And then finally, how they change society. And again, these are the boldest claims. I think they're deeply embedded in the way especially young people, but all kinds of people think about the world. And it's changed the structure of payoffs in the world. And when the structure of payoffs in the world change, as an economist, I think I understand, everything changes. And that is what is happening. And it's changing the way people, and especially young people, think about the world, think about their life, think about investing their human capital, think about savings, think about all the things that we have all done for the last 50, 70 years. And then finally, I'll talk a little bit about how to fix this and how it might resolve itself. Slightly bad news. So when I gave like a 30-second version of this talk to my daughter, who was lovely and encouraging about everything, as she always is. And then at the end, she was like, yeah, it's a little negative. And she was like, well, how are you going to fix it? Which is, exactly what you'd want a 17-year-old to say. And I'm light on that. I have some ideas. I'd love your ideas. But I'm light on that. I think that's okay, because I think what I really want to do is frame up the problem and convince you that this is the problem of modern capitalism. That's really what I want to convince you of. If you came in here thinking it's income inequality, or it's social technology, or whatever you thought, I don't think that's the problem. I think this is the problem. And it's underneath all of those other problems, which is just trying to get an excuse for not being that productive or positive at the end of this talk. But I'll give you some thoughts about that at the very end. Okay, good. So let's talk about what financial markets do. So in order to do that, I thought you could come to my simple world and ask the question I often ask myself. Often I ask it every day, which is, why can't life be simple? You may ask yourself that question. I ask myself that question every day. Why can't life be simple? So let me show you what a simple view of financial markets does, which is there are the good people with the money, the households, all of you and me, and we give the capital to the good people who run the businesses. And then the good people who run the businesses give us the returns to that capital, and life is good. That is what financial markets do. They're supposed to do. And the question is, why can't life be simple? Because that is not the world we live in. The world we live in is this. So what does that mean? I know you can't see all of this, I apologize. On the right, you still have the good people with the money, and you have the good entrepreneurs and the business people on the other side. But in the middle, you got all this junk, and it's called finance. And it's the money managers and the asset managers and the hedge funds and the mutual funds and the sovereign wealth funds and the investment banks and the analysts and the media and CNBC and Bloomberg and blah, 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 blah. It's all in the middle. And it's like 8 to 10% of GDP. And the question you have to ask yourself is, why can't life be simple? So I thought we could just take a moment to try to figure that out. Because if we don't appreciate what financial markets do, then you don't appreciate what all these people do, then it's kind of hard to get excited about all this. And in fact, many of you will look at this picture and see all those people in the middle and say, gross. Disgusting. Those people are the leeches. They just suck the value out of everybody else. Occupy. Sorry, slightly dated reference. I apologize. But take a moment to try to think about why they get 8% of GDP. Take a moment to think about what problem they must be solving. One view is they ain't solving any problems. They're the worst. They just suck value. I'm open to that idea. But be open to the alternative idea, which is actually they're doing something really, really important. Like maybe the most important thing. So I thought I would just take a moment and invite you to talk to the person next to you. What are all those people in the middle doing? And why can't life be simple? Take 45 seconds. Try to come up with a convincing answer to what all those people are doing. Go. All right. So I have a lot of other things I want to get through. So normally I would invite to hear some of your answers. We're not going to do that, just in the interest of time. But I'm guessing a bunch of people were thinking things like, well, you know, it's complicated, and I don't really know what those business people are doing, and so I need some help, and like that, maybe that's why. I mean, it's a small problem with that argument because that's pretty darn complicated. So if you think they're decomplexifying, I don't know, come to my world where it's pretty simple. Some people might think that, well, they're providing a pipe to get the money from the people on the right-hand side to the people on the left-hand side, and that pipe is valuable. And the answer is maybe, except pipes don't get paid. They don't get paid. And so it's not really a pipe, and it's really not like decomplexifying anything. I think the fundamental thing that financial markets are doing, and it is the deep problem of modern capitalism, is they are solving the problem of asymmetric information. So what does that mean? Asymmetric information means that there's somebody with all the information. That's the entrepreneur. That's the business person. They got all the information about the business. And you don't know if they're telling you the truth. It's the principal agent problem. What's the principal agent problem? Principal agent problem is you hire somebody to put insulation into your roof, but you don't know if she used the good stuff. She's your agent, you're the principal, and you don't know if she did the good thing. You go to a doctor, and she says, you know, you need an MRI. And it turns out she owns the MRI clinic. She's your agent, you're the principal, and you don't know. It's the biggest problem in the world, and it's the biggest problem in modern capitalism. Why? Because 150 years ago, most of us had the privilege of working for ourselves. You had a farm, you owned a farm, and you ran the farm. You had a shop, you owned the shop, you ran the shop. What is the nature of modern capitalism? I got shares in Apple. Tim Cook doesn't always take my calls. He's my agent. He works for me. I'm the owner. Is he telling the truth? I don't know. I don't know. And it's hard. And that is modern capitalism. The separation of ownership and control. And that's why finance matters. Because capitalism relies on the allocation of capital. And the allocation of capital is really complicated when there's asymmetric information because you don't know who's telling you the truth. Okay, that is what finance is about. And that's what all those people are trying to do. That's what corporate governance is about. It's about everything. So the premise of this is that the last 2 decades have changed this world. And in particular, this world has become dominated, not just the people in the middle, but the people on the right and the people on the left. The whole system has become dominated, maybe corrupted, by the rise of magical thinking. Okay, so having figured out what finance markets do, let's talk about what this era of magical thinking is meant to be. So here's what I think it is, and it's really 2 decades. So think early 2000 till today. It's a set of beliefs. What are those beliefs? It is a detachment from economic reality and traditional notions of value. So we've had traditional notions of how value is created. Magical thinking puts all that in the rear window. You don't really need to make profits. Just grow your business. It's kind of like detached from what the traditional notions of the things we might have thought of as running a good business. It is the extrapolation of current conditions and deeply ahistorical, which is we are on the cusp of a new moment. And that moment is unrivaled, and it will continue. That is magical thinking. History doesn't matter. That is magical thinking. Constraints are irrelevant, and trade-offs are unimportant. Why? Because technology will save us. It is techno-utopianism that has been foisted on you by vaguely messianic characters who are telling you that the old way of doing things doesn't matter. We have new ways. You have to tear up everything. You have to redo everything. That's magical thinking. I'll give you some examples of it, but that's the ideology that I think is at work, okay? First off, what gave rise to it? And the answer is several things. I'm going to geek out for a little bit, just to give you a sense, but just quickly. We have lived through this remarkable period of low interest rates. And that low interest rate environment changes the way we think. I know this is like scary. These are long-term and short-term interest rates over the last 80 years, 90 years. That on the top you'll see, we have been living at a time when, for the last 20 years, where 0 interest rates have been the norm. What does that do? It makes you think that I can take bets and they're fantastic. Why wouldn't you take a bet? Why wouldn't you put all your money on some long-term bet when the rewards to savings in traditional ways have gone away? Long-term and short-term interest rates change the way we understand the future. Second, we have lived through this remarkable period of stock market gains. In the last, this is, again, 80 years, this is a valuation metric for the geeks in the room. This is like a PE ratio, and current valuation levels, as Bob Shiller's CAPE ratio would suggest, are extremely high and have been high for the last 10 years, 20 years, and are ahistorically just completely abnormal. So that's the first thing. And we have had, during this period of very low interest rates, remarkable economic growth. Remarkable economic growth undergirded by a complete once-in-a-lifetime moment called the rise of China, which has given rise to a remarkable change in the global economy, one that we will never see again, cheap products that we will never see again, and 2 decades of growth that's been underwritten by it, and underwritten by remarkable fiscal irresponsibility. All of that has flushed the system. And when that system is that flush, the era of magical thinking begins. And then it gets even weirder and worse. Then we now have a consumer-facing technology, not something that's like buried in the machinery of a factory, but a technology that you carry around and that you are able to witness. And you believe and come to understand that that technology is amazing and is changing your life. That gives rise to this techno-utopianism. On top of that, there is this persistent anger about the global financial crisis. Old ways don't make sense. They got us into the global financial crisis. We need new ways. That was all corrupt. We need a blank slate. And technology, this thing I'm carrying around, is the amazing thing that will be that future. And then we get COVID. And the hothouse that COVID was. By hothouse, to return to our horticultural metaphors, is a place where things grow up really quick. And beliefs and ideas start to percolate. And people are alone, and they're on their computers, and they're looking at things. And then, of course, finally, we have the rise of 2 remarkable phenomena in financial markets, which is the rise of passive investors and the rise of retail investors. I'm not going to go too much into this, but for those of you in the know, you will know what I'm talking about. The people who own the most important companies in the world, the top 3 owners are, I can assure you, Vanguard, BlackRock, and State Street. Those 3 passive index funds and those families of funds are very large now. They are passive. They don't do much. That's why they don't charge you much. And so they just buy everything or sell everything. They don't do the information processing that financial markets are meant to do. And now they're so large that they kind of dominate. And it gets worse, because guess who's now trading? Your kids. The rise of retail investors has been astounding over the last 8 years. Commissions went to 0, and it became a game. Interest rates go to 0, commissions go to 0. What do you get? You get a lot of young folks going crazy. Creating that little picture I showed you now is even noisier than it would have been otherwise. Okay, that is magical thinking. But Mihir, how do I know? What is it? I'll tell you what it is. It's crypto. It's NFTs. It is meme stocks. Look at what happened in the last 2 days to Kohl's. It's not just GameStop. It's everywhere. Look what happened to Open Door in the last couple of days. It's even broader than financial markets. You know, what has happened over the last 10 years? It is the widening of corporate ambition. And my colleagues love this. It is about every company has to have a purpose to save the world. I confess, I think that's deeply confused. But it's magical thinking. Yeah, you know who's gonna solve environmental catastrophes? Pepsi. No, it's not. No, it's not. It's gonna be carbon taxes. It's gonna be the boring things you don't wanna hear about. And so we've kind of come to believe the corporation's primary virtue is to be social actors. That's magical thinking. I think it's really deeply magical thinking. I think there's a cult of entrepreneurship today. How do you change the world? You start your own business. And that cult of entrepreneurship is magical thinking. And it's been fueled by easy money and this entire time of zero and low rates. I think grift, as I mentioned, moves a little bit closer to the core. You know, financial markets, again, are characterized by these special purpose acquisition companies, you know, really speculative assets. Even the rise of alternative assets like venture capital and private equity are fueled by an element of magical thinking. Oh yeah, I'll give you some pension fund, maybe some endowment. We'll give a private equity fund X million dollars and be like, yeah, why don't you just, yeah, it's okay if it's illiquid for 10 years, whatever. No, it's not okay. and venture capital returns are not what many people claim them to be. It is magical thinking. By the way, there is like an element of this entire talk, which is just like straight up cranky old man. Okay? And I get it. Okay? And to be clear, I am a cranky old man. But that's not the point. The point is this right? I am a cranky old man. I understand that. But the question is it right? Even if I am a cranky old man. I think technology as a savior, and I know this is heresy today, to talk about AI and machine learning as if it's overhyped. But it is. It is. I really do believe it is. It is the latest version. You know what it was a couple years ago? It was Web 3.0, or whatever the heck it was. It is a cycle of hype that they addict you to generate returns. That is what this is. And of course, in the world of policy, there's all kind of magical thinking. Anybody remember modern monetary theory? What? Inflation doesn't come just when you do a lot of stuff. Yeah, it does. We can solve the world by nudging people to better outcomes. It's hard. Changing the world is hard. You don't solve it with a bunch of nudges. It's hard work. That is magical thinking. Okay. And then you say to me, Mihir, whatever. It's just like people have been talking about this forever. It's called a bubble. It's irrational exuberance, whatever. There's nothing new here. I disagree. I think it's different. Why is it different? Because it's been going on for 2 decades. And it's changing beliefs. It's not tulip mania. It's not the dot-com bubble. It's not isolated in a certain part of the economy. It is pervasive. And it is beliefs. It is an ideology. It is not a bubble. And once it's an ideology and it's pervasive, it's different. And it pervades throughout the economy. It's not just some isolated dot-com thing in the late 90s. That's what that was. It wasn't throughout the economy. Now it is throughout the whole economy. And then, once that ideology dominates, finance is no longer a mirror or a lamp. So what does finance become? So, and look, I don't want to provide too many caveats. I'm going to get more and more aggressive and try to make more and more aggressive claims so I can see if they make sense, and then you can tell me if they make sense, okay? So it becomes about a means to manufacture wealth and power, okay? So I wrote a piece for the Times about Elon Musk. This was like in February or so. And here's the point. Is he a great business person? And what I try to make this argument in this piece is there are 30 people alive who are better business people than Elon Musk by any observable measure. By that I mean building businesses of like long-term duration, value, and really changing the world. I can go down that list. Mark Zuckerberg, Jeff Bezos. These are people, there are John Bogle. There are even Jamie Dimon. There are people who have built remarkable, durable enterprises. He's not one of them. What is he? And what is his genius? And the answer is, his genius is he knows how to work financial markets. And he works it like you cannot believe. He has created a financial cult. By the way, for any of those familiar with India, the original master of this was Dhirubhai Ambani, who built an empire by cultivating investors. What did he do? He has, and this is the recipe, he has created a financial cult. What does that mean? So now, remember, Financial markets are not mirrors or lamps anymore. There are lots of deviations from value because people are thinking crazy stuff. And the bigger the promise and the further off it is, the better, because I got zero rates and I'm in a believing mood. So what do? You create remarkably unverifiable promises way out into the future. You raise money at extremely cheap levels because you manufacture and you ensure that the first 5 years are remarkable returns. Then you raise a bunch of capital when it is extremely cheap and people will give you money no matter what you are because you have proven yourself over the last 5 years to have manufactured this little return, and then you use that to go into something else. Where's the real business record here? I don't want to turn this into a Musk thing, but like it's hard to find. What we know is he's a financial mastermind. And his wealth comes from convincing investors that Tesla is not a car company, it is a software company. And that's what he's been, and now it's not a software company, it's an AI company. Why? Because that's where the money is. That's the source of his wealth, and of course, then that wealth becomes power in our society. And financial markets enabled that. And the bigger and the further off the promise, the better. Let's go to Mars. Let's do it. Okay, let's go, man. That sounds great. Yeah, we'll go to Mars. The reality on the business record is very complicated. I can go through every enterprise if you'd like. You can read the piece if you'd like. It's not that great. But he figured this out. And he used it to manufacture wealth and power. That's magic. That is magic. And he's using financial markets. There's a whole ideology of this. The guy who started SoftBank is the master of that. His name is my associate Sean. You know, in some ways, the guy at Palantir is trying to do that. Peter Thiel is trying to do that. There's a whole ideology here, which is nothing else matters. The future is everything. I am your guide to the future. I am your guide to the future. And by the way, most people, little people, don't understand the future. I understand the future. And I will be your guide, and I will take you there. It's messianic. That is the way you amass power. There's a whole ideology there behind that, which is you have to be a thought leader. The past doesn't matter. The future is everything. Technology is everything. If you're with me, it'll be, and by the way, everything is all or nothing. There's only going to be one winner, and I'm that winner. And if you believe that, you're forking over capital like you wouldn't believe. And that is what this ideology allows. And it allows the manufacturing of wealth and power, and now you have a cult. And a cult, as you know, is like a very powerful thing, except it's a financial cult. That is what finance is becoming. It is becoming that, and that's a problem. I think finance then also, in some sense, that is the manufacturing of wealth and power. It used to be you built a business, and then the mirror told you that you had manufactured wealth. Now I'm using financial markets to manufacture the wealth. Okay, it is also a mechanism, I think, I feel like I should just pause, which is these, I think I'm saying things that are fairly radical, and you might think to yourself, he's like, he's just a radical guy. I love finance. I love finance so deeply. Like I grew up, I've been like teaching it for like 28 years. I grew up, I'm an economist. I think financial markets are incredibly important. I'm not an anti-finance guy. I'm an anti this version of what you're seeing. And so I'm not like some crazy heretic guy who I'm like the opposite of that. But this version is pretty bad. Okay, so it can also be used to redistribute wealth. So what does that mean? So finance and the practitioners of finance, and some people in this room might be practitioners of finance, we cloak ourselves in the language of value creation. We enable value creation. Why? Because we give the entrepreneurs the money, and then the money, and the money, and the money, and they grow it, and then but we enabled it because we are the value creators. We're the value creators. Well, what if finance isn't about that? What if it's not about value creation? What if it's about redistribution? So what do I mean about that? It's about the transfer of value. So Here you get a picture from late last night. So there are things called stock price charts. So if you kind of go to Google Finance or Yahoo Finance or whatever you may go to, and you kind of like type in this ticker, you will see a chart that will show a stock price performance over the last, whatever, 20 years. I'm going to suggest there are 3 charts. There are basically 3 charts. All of them kind of look like one of the 3 things. What's the first one? It's the Mag 7. The companies you know well, NVIDIA, Microsoft, Apple, blah, blah. The Magnificent 7, which have come to dominate financial markets. And they look like that. And that is amazing. Amazing. Turns out there's like very few of them, but they're amazing. They're like amazing. I'm not going to doubt that they're amazing. Okay. Then, what do you have? You got a bunch of people doing nothing. It's like the unmagnificent 400 or something, right? To put it in more technical terms, they're probably not beating their cost of capital. They're kind of hovering along, and they're just doing that. And they've been doing it. It's quite remarkable. Type into one of those, whatever, your favorite search engine, type in a household name, you know, Pepsi, Humana, like companies that you would have grown up with. It's kind of been like nothing. Merck, you've just been nothing for a long time. That's fine. That's not a problem. It's hard to beat your cost of capital. It's hard to create value. We understand, like it's genuinely hard. Okay, but my concern is with the ones and the picture on the right. That is an incredibly dominant pattern today. It is all over the place. And it's remarkable. Even big companies, you know, to some degree, like, you know, Salesforce, or like companies that you would have heard of, they are big companies, and there are lots of dinky ones that basically look like that. Now, you might say, yeah, Mihir, that's a problem. I agree. But it's not that big a deal. You got to have failure in the world. I understand that. Here's the theory that I'm trying to espouse, which is, wait a second. If I can create, well, obviously, I'd want to create the Mag 7. If you're an entrepreneur, like, why not, right? Turns out to be really hard. Like, really, really hard. Okay, well, what could I do? What's the second best? And the second best is the one on the right. And then, what do? Well, I manufacture that in the way we just talked about with magical thinking. I promise so much. People believe these promises during these periods. And then I sell at the peak. I raise money at the peak. And then it falls apart. And I sell out at the top. I being who? Insiders, funders, sponsors, all kinds of folks. And I cloak myself in value creation. But what have I done? I have just ridden that little roller coaster perfectly. And by the way, I don't have to get it perfectly right. Like, if I'm in close to getting it right, I'm going to win. And the answer is, what's wrong with people winning? Yeah, fair enough, except people are losing. It's all the people who buy at the top. This is a pattern you can see if you're in the financial markets. You know, it's CoreWeave today or whatever and these are not $2 billion market caps. These are $100 billion market caps. These are $300 billion market caps. These are large companies that look like this and have looked like this for the last 5 years. And so that is not value creation. That's not a mirror. It's not a lamp. It is redistributing wealth. And I cloak myself in that language of value creation. Okay, now let's get, so if that's not aggressive and bold enough for you, I think magical thinking changes society. So what do I mean by that? So, well, now payoffs have changed. The payoffs on speculative assets have become amazing. And when the structure of relative payoffs changes, people change, and people change what they do. And so what does that mean? My buddy made a bunch of money on Doge. Doge is a currency, a cryptocurrency. My buddy just bought Kohl's at 10 and sold it at 20. Okay, well then what am I doing anything else but that? And the rise of these speculative assets changes how we think about the world. And how is that manifest? Well, people allocate time, energy, capital, and their lives towards the most speculative assets and the most speculative activities. Why? Why not? Why wouldn't you? When the structure of payoffs changes that fast and that much, people change decisions about their lives. What happens? I think horizons shorten. I think everybody's looking for a lottery-like payoff. What does that mean? I'm going to go work at that VC fund. I'm going to go work at that startup. Why? I'm buying a lottery ticket. We're all just buying lottery tickets. And I'm buying lottery tickets with my human capital. I don't think, speaking for myself or for my father, I don't think he thought about the world that way. I don't think I think about the world that way. And I think it's changing. And I think there's a reason why it's changing. I'll give you the piece I'm working on now, which will hopefully come out soon. How is this manifest? I mean, I have to say, look at what's happening in finance now. It's something that I would like to christen bronance. What is bronance? Because these activities are dominated by young men, absolutely dominated by young men who are doing this 24/7. And what are they doing? This will be a little geeky for the geeks in the room. The vast majority of option trading activity today is happening on zero-dated options, which are options that expire today. They purposefully expire today. Why? Because I ain't investing in the future. I'm just punting. Exchange-traded funds, which are passive vehicles that actually allow people to index in relatively cheap ways and tax-efficient ways, kind of super interesting. What is the most popular form of ETF today? 3x the QQQ, which is like the NASDAQ 100. 3x means levered 3 times. Those are the most popular instruments today, and they're getting traded all the time, and they push and pull the market with them. And this is really done by young men. It is what Robinhood is about. It is what Charles Schwab is becoming. It is what lots of folks are about. It's what Coinbase is about. That's what they're doing. They're not like deeply investigating the future of United Health to see if it's a buy. That's not what's going on, which is what we thought was going to go on in the mirror and the lamp world. And by the way, that world is just so redistributive, you have no idea. Because the people on the other sides of those trades are making money hand over fist. It's an entire business model in the zero-dated options world. It's an entire business model for the people who create these ETFs. They're making money hand over fist, and they're redistributing. And so as these markets get gamified, there's just transfers of wealth like you wouldn't believe. I think it is manifest in this cult of entrepreneurship, which is the best thing to do is to start businesses. I believe in entrepreneurship. I love entrepreneurship. I love my former students who are entrepreneurs. But is it that everybody needs to be an entrepreneur? Really? Like, how did that happen? If you are in a business that is not technology-based, forget about it. You're an asset-intensive business, you're in a capital-intensive business, nobody cares about you. You will not get rewarded in the stock market, and you will have a hard time in life. And that is what's happened over the last 10 or 15 years to materials, to energy, to you name the sector. Anybody in asset-intensive spaces, why can't you be a technology company? And then they rebrand themselves a technology company. And not buying a lottery ticket is for suckers. Okay, let me try to finish up. I said, you're like, okay, hopefully you buy that this is a way to understand the world. This is like a real, hopefully, what I'm hoping is you buy this as a real way to understand the world. It actually undergirds the problems you think of. You know, where do you think income and wealth inequality comes from? It comes from this. This gives rise to an amazing amount of income and wealth inequality because the redistribution is happening from the insiders to the insiders from the outsiders. If you think the way companies are run is like not great because they're too short-term or whatever, this is what's behind it. This is what's kind of going on in the background that's determining these outcomes. Okay, how do you fix it? I don't know. This is like the weakest part of the talk. So the first thing to say is, I used to think, I published this op-ed 2 years ago, I used to think it would end naturally. Rates would rise, as they have, this would get punctured, people would figure out all this silliness is over. I still think it will reconcile itself, because it has to. But the thing I've learned in the last 2 years is magical thinking dies hard. Magical thinking dies hard. And there are powerful interests vested in propagating it. And that is true in all kinds of ways. So how will it unravel, and how should it unravel? And again, I'm light on prescriptions, I'm open to your ideas, but I think my primary goal is to get you to think about the world this way. And it's gotten harder, because magical thinking is now ensconced in very powerful economic and political institutions. And they have figured out that it is a mechanism for them to manufacture wealth and to redistribute wealth. And there is no better way to manufacture and redistribute wealth than financial markets if you play it right. It's unbelievable what you can do. And by the way, just mention briefly, the things you see today with Bitcoin treasury companies as one example, it is about that. So look, as an economist, it's been a tough 15 years, because every time you teach finance, someone's like, what do you think about crypto? And I think, it is the perfectly confected, speculative asset with no underlying economic reality. And that is a beautiful thing to the speculator. And it's also obviously sometimes a cloak for vaguely nefarious activities. It doesn't have economic function absent that. What if people figured out we're going to create an economic function for it? That's what the stablecoin legislation is a little bit about. And that's what you're going to see more and more of. You're going to see people create economic uses for something that is really not required. But it will continue this. And that's why I think getting that genie back in the bottle, or lamp, or whatever it is, I think is very important. Because as long as that's out there, you know what everyone's going to say? Did you see Ethereum today? Did you see what Doge did today? It was up 10%. Oh my God, okay, I got to pay attention. And as long as that's happening, we're going to live in this world. What else has to happen? I think the retail investor has got to, this all sounds terrible. It's got to get taken to the woodshed. That happened a little bit in 23, but it's got to be permanent. We've got to get the retail investor back in the box. It's a really remarkable distortion to young people's lives. And it's a remarkable distortion to the price signals in the economy. And it ain't a mirror, and it ain't a lamp. And I think finally, and this is something I would encourage you to think about, is we have to stop believing that technology is the savior. Now, I love technology. The growth of technology has driven productivity growth for millennia. I love it. I'm an economist. I get it. Productivity growth is everything. Blah, blah. Love it, love it, love it. Okay, here's the problem. The kind of technology we're talking about, and people have been talking about, this is a complicated picture. I'm going to just try to walk you through it. They have been telling us for 20 years technology is going to deliver productivity growth. It hasn't happened. Now they're telling you again, it's going to happen. And it's going to be amazing. Maybe it will. My sense is it'll be a lot like the last 20 years. Pretty great. But it ain't a step change. What does this picture say? On the right-hand side, which is the light blue, that's average annual productivity growth in the US economy over the last 70 years. And it's roughly 2%. So over the last post-war period, productivity growth has been 2% a year, which, by the way, is awesome. Amazing. It is why this country is what it is, and it is a reflection of what this country is. It's amazing and has fueled the life we get to live. Okay, so 2% is great. Go period by period. There is the post-war era. That is all the way from, 47 to 73. That's the left-hand most bar. That is where real productivity growth happened. 1947 to 1973. Massive productivity growth, like 3% per year. Okay, what's happened since then? Hasn't been great. There was a period in the early 2000s and the late 1990s when there was real productivity growth from technology. Like Walmart's adoption of barcodes alone is like crazy productivity growth. What have we seen since the early 2000s? Not much. Not much. Now, that doesn't mean technology is bad. I love technology. I love technology. It is going to be an engine of growth for us. I get it. But people are selling you on the idea that it is a step change to humanity and productivity. And I don't believe that. And I think you should rethink that. And I think the more we turn our back on this, and now you're going to say to yourself, he's not just an old man, he's a Luddite. No, I think technology is very powerful, but when it's oversold and it's overhyped in this way, it gives rise to these dynamics that we've been talking about. So that is the way this will unfold. How and when, I don't know. The other possibility, it's a decade of grinding low returns, grinding low growth to catch up to the inflated values, and we just all grind for the next decade. It's not bad. It's not like the global financial crisis. It's Japan. Like, think Japan, mid-'80s to mid-2010s. It's just Japan. That is a way for this to get undone. I'm confident, though, that it will die. But the longer it persists, and the longer we are unaware of its manifestations and its mechanisms in our lives, in the lives of our loved ones, in our economy and in our society, the longer it will go on. And then hopefully we return. We return to the wonderful notions of value and value creation and common sense and trade-offs that are where value is really created and is what economies should be doing. Okay, I ran a little bit late, but thank you so much. Thank you. Sorry, a little bit late, Shannon. Thank you.